All right, welcome everyone. Hello, hello. Hi, Stream. Hi, Steve. How is it going?
Oh, everything's good, Henry. Feeling
Okay.
good. Good week upon us. Seems like markets are shaking up the news from yesterday, but that's no surprise there. But always good, my friend. How are you?
Yeah, same. And you already mentioned it. Markets shaking off the news. We talked about it yesterday, right? You follow the charts. You never know what happened. It's just a temporary thing or something lost lasting. So we don't know. Therefore, just follow the price. All right, let's go. Yesterday, the big headline obviously was Trump ceasefire ends and the upcoming FOMC meeting. So let's dive into it. Um, what's your take from FOMC meeting?
Honestly, I didn't see too much from FOMC. It seemed like we were getting more. Where was FOMC? Right around here. It seemed like we were getting more impulses and headlines actually prior to FOMC. As you guys can see here, these are the levels I just want to quickly showcase that I drew yesterday, and look how nicely it respected each level from stage to stage, and now we are rejecting to the top side. I just want to quickly just recap, since Henry was asking about the FOMC minutes, how it came right around here, 29,350. We saw some bullish price action, but volatility was still stagnant. Not much happened from the charts itself. But where the real action came was after we retested the pivot down at 29,050. Trump was starting to make remarks. Iran doesn't want to make another war. They want to contact the US, have some negotiations, and this is what sparked the true velocity and good price action, which I start entering in right around these levels, because what I do is I always wait for the reaction, and we got a strong reaction down at the pivot I try yesterday. It doesn't always met this cleanly and nicely, as you can see from the bottom. Look at this,
Yeah,
Henry. Respected the ceasefire or the non-ceasefire news pivot all the way now retesting the top. So this is just all from yesterday's pivots. I just want to showcase to you guys, see how nicely it can get respected from level to level. Of course, it doesn't always get respected like this, where a lot of times it can, just kind of fall through, consolidate, and then make a decision. But it was, what a beautiful day of trading it was. This is what I always wait for. This is why I set alerts to these pivots. And yeah, like Trump was, changing his mind, saying there could be some negotiation on the table. We got the spike up. And then when the minutes came in, then really, I was already done with my trading. But it was just interesting to see that the level here at 29,400 was holding after the minutes. And there we go.
yeah.
Close.
It's always the best to be done before the actual news coming out.
Yeah, exactly. So it was a nice day. I'm in a good mood. It was a nice day. But like I said, treating every day the same, which is why, always we like to keep you guys aware, keep ourselves aware, talk it out. So anytime I talk it out, whether with, accountability partner or with Henry or with the stream, this makes my focus a lot stronger going forward with my own training as well. So this is why we do it,
Yeah.
you guys.
Yeah. Now maybe just one more thing to add. I think I don't want to confuse people if I talk about FOMC. Obviously, it's the it's the minutes, right? Not the meeting itself. It's an old habit of mine because I always assume that people know. I'm
Yeah.
always up to date about the news, and yeah. So no, it's the minutes. Actually, just maybe one thing to add. So yeah, they completely cut it down, the whole like the usual outlook, right? There was not much of it as expected. It was also, some would say, more hawkish than expected overall. So there were not, like, almost no one was talking about rate cuts. I think just one person mentioned rate cuts. Everyone else is like the half basically expects maybe even another hike, or at least it's stable. So therefore, I think that's important to know that the monetary policy will most likely be restrained till the end of the year. And it's not surprise, right, with the whole Iran US thing going on. markets are super cautious. The whole oil supply possible shock is completely a big question mark. What would happen? Will it have any kind of follow-up shock waves that we will see maybe as a second step in the autumn, winter time? So I think it's a good thing that they actually take a more cautious take instead of just pronouncing that they're gonna cut and the market's gonna like party a bazooka, that market's gonna party like it's 1999.
So what Henry's saying, you guys, is he appreciates these new Fed chairs a lot more than the previous, right? Do you feel like the tone is shifting now with the FOMC, the minutes, the new Fed chair compared to Jerome Powell? Maybe it's just time to kick the boots.
Yeah, I mean, I hope it will be more reasonable, and I always had the feeling that Powell was like really not neutral, right? I mean, it's a good thing if you are positive to the markets, but at the same time, I think you also need to be a little bit realistic in terms of the long-term outlook, and you cannot just say, all right, I'm gonna cut, and you push up the markets up to the sky, even though there's no reason for that. But it's another topic. All right, what else do we have? U.S., Iran. You already mentioned, as expected, right?
Yeah,
the U.S. doesn't want a big conflict.
Yeah, how it reverse that pivot line completely. But Henry, that's only Nasdaq, which is it's giving us a little divergence, which I'll get into later on the ratios. But it's very interesting how Nasdaq has overtaken this level from yesterday. Trump making some comments, even though the comments weren't very strong. And like you said, with the FOMC minutes, it made sense how we were printing bullish price action. But this is only Nasdaq itself, you guys. This is why it's important to look at other indices, even look at gold and silver and oil, and see the overall scope, because Nasdaq only looks at aggressive, forward-looking tech stocks and not the whole picture. But I will definitely get into that later. Yeah, sorry, Henry, I just wanted to...
No worries. I mean, just maybe one thing to add. Given how the markets has developed itself over the last years, one could think that everything is just looking at the tech stocks, right? Yeah. And as long as they are running, it's basically just like pumping up everything else.
Yeah, everyone just looks at Google and Elon, which is also the issue. You should only be looking at Google and Elon. There are other factors at play.
Yeah. I think, I mean, we talked about yesterday, right, that in terms of Iran and the US, be cautious, always have a stop in place, because news can drop from any kind of source, rumors. A news outlet could mention from trustful secret sources, we have this and this information, right? And then the market just rallies to 100 points in a couple of minutes. So everything can happen, basically. Therefore, always be cautious. Again, risk disclosure. Please do your own thinking. Don't take anything for granted what we are talking about, and always do your own thing. Yeah. All right. Let's. I think for today, nothing I mean, we had unemployment claims, right? But I would not say it as it was right within the range. So it's basically a non-event for me. And existing home sales, usually it's a non-event. It's just in case it's going to be it's a huge miss or it's a huge outlier, then it can move the markets. But as long as it stays within its range, nothing probably will happen.
I could just quickly talk about it, because we also have the FOMC member Williams speaking right now. Can make some statements to spark volatility, as well as like you said, home sales coming half an hour after. I could just quickly talk about it, just so we know about it, because I feel like I said before, once I talk about these things, then it gets implanted in my mind, in all our minds. So it's nice to just not ignore it, just speak about it. So when the time comes,
go forward. We have the time.
So when the time comes, it's like, okay, I relayed some information, I was aware of it, and it was not missed. So yeah, as Henry said, yeah, existing homes. Sorry, unemployment claims came out. I don't know what the actual mark was. Was it? Yeah, the actual was just a bit less than the forecast, and also less than the previous. Not by much, just by a few thousand, but still a miss. Price entered into the extreme pivot level that I marked out from yesterday. It's getting rejected right now. I'm not saying, you guys, that this is a complete rejection going all the way back down to the ceasefire, or sorry, no ceasefire, the no ceasefire pivot from yesterday. But yeah, so far we're getting rejected. And I'll get into the ratios later where NASDAQ is looking the strongest, but the other indices are actually telling a different story. But let's just get back into the news, you guys, and just quickly look at the numbers. With the consensus 4.2 million, previous 4.17. So, a modest rebound after last month would definitely give us a bullish indicator on existing homes. Of course, this will affect other assets and indices a little more than NASDAQ. So it's not a major play here, but always good to keep in mind. And then also we have FOMC member Williams speaking, I would say currently right now, yeah, he's making some comments. You guys could check that out on Financial Juice, News Squawk, other areas for like the live comments. See if any red tape comments will come out and move the market. Shouldn't be any surprises, you guys. Expected. Could be some market movers and data dependent. Since this is a data dependent environment, if he acts out of line, as you could say, make some comments that the market wouldn't expect, create some volatility. But then again, we always wait for the reaction, you guys. So see if the ATR or the charts start printing stronger candles, stronger closes. Sometimes I keep the ATR on my charts as well, but more in the shorter time frame, just to see an increase in volatility and just go from there. And then with housing data as well, this could be consumer health. Interest rates stronger than expected would be signaling resilience in a large asset class. So this also could support broader economic confidence and ease recession fears, because recession will always be a main headline on the tape. Are we in a recession? Are we not? That's the question, Henry. Are we in a recession, Henry? What do you think? Because this also could dive into real estate and housing. Because if home sales start to decline, that could be an indicator of recession as well. Like, what do you think?
I have the feeling that you can only tell if the recession is already underway just after you already see it.
After, yes. Yeah.
Because otherwise, it's probably just it's a guess, right? Mm-hmm. I would say, I see it in the US, I see it in Europe, that the low incomes, or maybe like the medium to low incomes households, they're struggling because the inflation has been so high in the last 5 years, 6 years, 7 years. Overall, we see some impacts from AI, right? That some jobs are getting redundant, getting cut, or not as many companies are hiring for new positions. Mm-hmm. But is it a recession? No, I would not say so. I think like recession, you really need to have much more data. So you really need to see unemployment exploding. You need to see many quarters of growth GDP projections not being hidden, or it needs to be revised down, those kind of things. At time being, there might be signs, but it's for me personally, from my experience, it's more like the clouds on the horizon. But those clouds on the horizon has been, to be honest, there for the last 10 years, 15 years, and they have been always washed away with monetary policy, MT, money printing, QE, whatever, all those kind of things. So for the time being, no, I don't think we're in recession. I think it's a nice thumbnail, it's a nice title that gets you clickbait, right, kind of thing that people click, and you can always talk about it. But for the time being, I think it's we see nothing about that. At least not, as I said, nothing big.
Nothing big. no aggressive rate cuts either, because remember, once the rate cuts are being aggressively shown, then that's also a signal where the jobs, the economy, housing isn't very strong. But because they've been denying the rate cuts, denying Trump the rate cuts, hey, like it's strong economy, and we all know the U.S. affects the rest of the world as well.
Yeah.
We all live in different parts of the world, but the key here is, my friends, don't focus too much on what's happening so much on other markets, other countries, or even your country. Focus on yourself. Focus on building your skill set, something that could also be recession proof. And as we all know, in trading in prop firms, that's always going to be recession proof. So that's why take your time, build your mindset, build your skill set. The markets will always be there, whether it's a bull run or bear run. It's not going anywhere. So this is why I'm just that's why it's important not to go all in either, but to build this side skill set, because you guys have the opportunity here with Purdia, with prop firms, to earn a little money, where if something, you're struggling with your job, your 9 to 5, or other things in your life, it's always a good back burner to have, because not too many people have the patience, but if you have the patience, the resilience to grow that entity in your life, then that's something that will last forever, because AI will be never taking over human emotion and human psychology. That's basically what the market is. It's a mirror of yourself. It's human psychology. And if you guys can get over that hump of
Yeah. I mean, we have heard it now for so many years, right? Back high frequency trading, dark pools, algo trading, whatever. Now AI. It's been always the same story. It's like, yeah, it will take away traders. No, it's not. It's just another tool set. It's just another vehicle to manage portfolios for money managers or to trade. But the trading itself will never go away.
Yeah.
And I think a little bit, the biggest misconception is in trading, you can get and be lucky for quite a while, and you still don't know what you're doing. And you just have a good run because the markets basically align perfectly with your current strategy. But if you have never tested the strategy under different conditions, right? Like, because let's say we have 5 states. We have strong bull, we have neutral, we have weak, like normal bearish and strong bearish. And most of the people, they're just testing one scenario, right? So they go back and test it like for over a period of 2 months, just for one asset, let's say NASDAQ, and then to get some results that look good, they trade it. And then like, oh yeah, the strategy is perfect. And then the market changes from strong bullish to neutral or to weak bullish. And then it's like more choppy. The reversals are much harder. The downswings are hard, and then the strategy stops to work. And then like, all right, is it a bad strategy? Maybe, or maybe it's just not properly optimized for all kind of different market conditions. So instead of risking 2%, the strategy might be profitable by risking 0.5% or 0.3% of your portfolio. And those things you only find out if you really properly take the time and backtest it, not only in one market, not only over a specific period of time, but like over multiple markets, all kinds of different market conditions, all kinds of different time periods. And this is how you create a stable system. And I think this is the single one most important thing in strategy design and designing your system, to understand this interplay.
Yeah, 100%. It's why they say it takes on average a few years, because you have to go through all the cycles, the bear, the bull, different, you can also say different election cycles, because a lot of times, yes, the presidency, the politics affects the regime. Now that we have a new Fed chair, that's going to completely shift things as well. So
no, it's true. I mean, under like with Powell, the market's new. There's the Powell put, right? So now we have kind of the Trump put, but the current Fed chief is unclear what's his stance. Will he bow to Trump if the markets are down 10-15% and Trump will put pressure on him, or will he just market be the market and do what's right for the economy and not what the president wants him to do, right? So those things are unclear up to now. So therefore, this is what I said in the beginning. There's this uncertainty in the
Yes.
markets. What will happen?
Yeah. But the one thing that will never change are these headlines, pre-market or even during market, increase in volatility, and then the reaction that we get off these pivots. That's why I claim my strategy just to be so simple, because that's the one thing that will never change, you guys, is headlines, volatility, and then the retest of those volatility pivots. And that's always going to be a strategy I can rely on going forward, whether, because there's only two ways price can go, up or down. It's not going sideways. Well, if you know what, Henry, maybe there's a sideways price action. And what is that? That those are the market makers, the algorithms that are picking off the spread and the gaps in markets. That's what the algorithms do. They pick off those tiny profits in the spread, because there's never going to be enough volume in the market, Henry, to always be in line for the buyers and sellers, or to match each other at all times. So this is why there's high frequency trading, but the high frequency trading algos have a different approach and a different way to make money that us humans will never be able to make money. So I don't know why people always think like, oh, like the algorithm took me out, or no. The algorithm has nothing to do with it.
He doesn't care.
He doesn't care. He's just picking up the spread, picking up the fees, the in between, profits, where that is in nanoseconds that we'll never be able to see as humans. But the opportunity for us humans to trade the trend, or some mean reversion ideas for, if you're seeing gaps in the market, it will always be there, because human psychology and humans will always exist. So Purdia is offering you guys opportunity. Just take your time, learn. That's all I can say, Henry.
Yeah, no, I mean, it's the right thing. It's also the right approach. I just have the feeling that nobody has time, right? Because social media,
they rush you.
I'm always sitting on social media. I'm sorry, but it's like I see it all the time, right? Every day, you see it like, I made another, God knows what kind of amounts, and here and there, and it's like, all right, so this guy only posts his winnings, but where are his losing trades, right? Why does he need to sell a course for $50 or whatever, or for $20, for $100 a month, if he is printing money without any with any losses, with any stop outs? And I think this is like what people always need to have in mind. If somebody just posts like exponential growth equity with no losers, it's not the way how the market works. And I think the biggest misconception is that people don't think about trading in terms of equity growth and portfolio. Like, all right, if you have $100,000 and you make 50%, you're already far ahead, of 99% of the traders out there. But people don't think this way. It's like, all right, I need to make 50% this week, right? I need to make 50% today. I need basically to get to this amount as soon as possible in order to quit my job. But I can tell you one thing: if you cannot skip the process, because your identity needs to change. You need to adapt the skill set. You need to learn all the ins and outs, and that's basically the thing. And the thing, if at one point when more people start watching us, and you will compare like this stream with other streams, and you will see the difference. Like, all right, how much do you understand about the actual topics, right? And not just the setups and ICT names and whatsoever, but basically, all right, the market dynamic, fundamental news, the interplay of market correlations, big picture, those kind of things that will make a big difference for everyone who is watching, basically for the whole life, right? For the long term, for the long run.
Yeah, maybe they're feeling lonely, Henry. Maybe those big guys are feeling lonely, and they're just
watching. Yeah.
Just having copy trading 50 accounts just to bring in people to chit chat and connect with. But anyways, you guys, it is a lonely journey. That's why we provide this here. You can connect with us at any time, you guys. Like with same as like any workplace, you're never going to be going through the process alone. So remember, Henry and I are always here. Purdia is here. There's a Discord. Connect with other traders. So what's the big picture, Henry?
All right. So yesterday we talked about like yesterday. It seemed like we would have a sell-off, right? But we also talked about might also be a reversal. So therefore, today rally or reversal. Currently, reversal stage. 2 days ago, we talked about our diamond formation. Basically, this doesn't appear that often, but if it appears and it breaks down, this would be, and it usually sits on tops or the bottoms, right? That would be a top formation, but it currently is holding up.
Yeah,
And
still holding. Yeah.
it's still holding. And in the same time, I said like, all right, guys, I have no idea what's going to happen because on the big picture, we still have our uptrend. And we also still have our amazing measured move that goes almost 30% up. And that's the thing, right? So it's not about being right, or nobody knows what will happen. So it just follow the chart and be aware of the consequences. I talked a little bit yesterday about this. So if it breaks out above, let's say like this, right? We might see a correction, we might not see a correction, but I can tell you one thing that most likely is about to happen once we are hitting above the all-time high and we're going above. I can tell you we will see acceleration because many big players who were positioned on the short side, and I mean we're talking here like June, July, right? So at this point they have been positioned there, or they built up positions over like 2 months. So we also talk about a proper amount of liquidity sitting there, not just some intraday minute chart moves with a couple of hundreds of lots, but we're talking like billions and billions of dollars in stops sitting there. And in the same time, the CTAs or many algorithmic trend following programs also need to buy new all-time highs, right? So then like you have this passive inflows coming in, and then it will accelerate this whole thing. In the same time, if we go down, then obviously the market always favors the long side in the long term because it's just structured this way with all the sell side and ETFs and everything. But in case we go down and we breaking this level here, what is it, 28 600, then we might see, I'm not saying it's going to happen, but it's a likely scenario, at least at this point. If we break below that, we might see an accelerated downturn because then all the stops of the people who were on the other side also need to be liquidated. And so it goes in both ways, right? And for me personally, I don't care which way it goes. It's more about that I need to be aware in which direction it can go, and then adjust my strategy accordingly. Because once it has broken out, and it has been broken out with volume, forcefully, maybe even across different other assets, like the correlated assets, right? That we also see an upside breakout on the ES, on Dow, on Russell's, like across all major indices, then you will know like, all right, this is something that has potential, that has some force behind it. And then you can adjust your strategy, and you can maybe, instead of going for 50 points, you can go for 75, 100 points, 150 points and get like bigger days, right? And at the same time, if you have a proper strategy, a consistent, profitable strategy, you can also build up a buffer. Therefore, check out with, actually.
Yeah, we have market open right now.
Yeah.
Ring the bell, Henry. Ring the bell.
Yeah, let me ring the bell. Ring. Where's the bell? The bell.
Oh, you have a bell.
I have a bell. I have it's right. No, it's not. There's it.
There it is, guys. Purdia's official bell. Market is open.
Yeah, I think I need to write a script to just get a notification popping up directly on the trading view.
Everyone close their eyes in the next 15 minutes.
Yeah. All right, let's see. So triple Qs. It looks messy. Okay. Let me clear this out.
Yeah, there we go. That's nice, Henry. That's nice. Nice and clean.
We zoom out.
We got the gap below.
So yeah. I mean, it's basically sitting in a range, right? So we have this big gap, 5 points above. We also have the gap from yesterday, 5 points below. So we're basically sitting right, you could say, right in the right at the fair value, right, of this range, overall range. like depending how far you zoom out, but over the last couple of days, we're basically sitting right in the middle. And so for me, I expect a reaction either to happen at the low side or at the top. And then so it needs, like for me personally, in order to be long or short, it would need to break one of these two, right? So in Q, actually, you know what? You always have your open levels. Oh no, actually it's fine. Let's quickly make the big picture. Okay, so what do we see? Yesterday we could not go below, so the wick is always a representation, especially if it's a long one, that the market want to go the other way, right? So the reversal started yesterday basically, and so today it's a continuation day of it. ES, actually ES looks on the daily much more bullish than the Nasdaq. I mean, that's some, like we talked about already a couple of weeks now, that Dow is just super bullish overall. And a part of this bigger like it's not even big, but a part of this like 4-day correction, it's been just like slowly grinding up, right? Slowly grinding up. Russells also bullish. Gold, yeah, I mean,
Gold is stuck.
Yeah, it's already stuck. Say silver.
But it's also the summer months. I noticed that, Henry, because you've seen this for a lot longer than I have with commodities, and it seems like it's always that story with commodities, gold and silver. Even with stocks, I noticed in the past where what is that saying? Like usually in the summer months, they what is that? What is that saying where they sell and they look
sell in May and go away.
And go away, yeah. Sell in May and go away. That's the saying right there. And it happens almost every time with gold and silver, it seems like. And then September comes and we get a big swoosh of volume.
Yeah. I think many people also need to understand the whole psychology behind the markets. Yes, we have like market makers need to like adjust, right, all the option plays. But the big money is still managed by real people. And these real people, these professionals, and we're talking people who are managing billions and billions of dollars worth of commodities for like food suppliers, for the industry, right, for those kind of things. Many of them have family, or they have like summer vacations, and their schools have vacations, so they go on vacations, they go on summer holidays, and then there's no counterparty. So what do you do if there's no proper counterparty where you can trade size? You reduce size, or you just say, hey, you know what? If nothing fancy happens, we just ride it out, right? Nothing, like no big bets, nothing big is going on. And in case something big happens, then those guys unfortunately will be brought back to office and they need to work.
Because there needs to be another large bid on the other side for them to release their orders. This is why they say a lot of times, they create these headlines, they create this hype on purpose, because they're like, oh, we got to get out of our position. But where the structure is right now, the book is so thin where, it needs to move to a certain position, or we want to get a better price. Yeah, that's why they push these headlines. And that's why they talk to, hey, Wall Street Journal, this is what you got to do for me. But hey, whether you guys like it or not, that's how the market works. And that's how it always worked.
And that's the thing, there are so many books have been written about it. Let's say like my favorite, like my number one favorite book of all time for trading is Reminiscences of a Stock Operator.
Oh, I've never seen that one. I've never heard of it.
Yeah, you should read it. It's like written 100 years before, or like 100 years ago, and they're talking exactly about the same thing. Like today,
you'll have to send me that, Henry. Man, Henry, you never told me this. Unbelievable. You tell the people, but not me.
Oh yeah, I'm sorry. But you know it now. And no, it's a good book. I already read it a couple of times over the years, and they're talking about that already, like in the 1910s, 1920s, right? Yeah, undisclosed source stated this and this. It's the same thing as today. It's the same thing as today. It's basically like Axios is coming out, and their sources are telling this and this, or the like who is the source? Like what kind of interest does the source has in any particular market? Is it long? Is it short? Is it yeah? And that's the thing. So those kind of market manipulations. When I was younger, I was naive enough to think it might go away with time, right? Because like we're modern and social media, and no, it doesn't go
It's
away.
more aggressive with social media. Yeah.
Yeah, no, really, it just doesn't go away. All right, so where do we sit? Let's follow up. So yeah, basically yesterday. Let me clean this up here. Let me clean this level up too. So that was the initial push, right? So that's the level we're watching, 72 plus minus. News came out, could not proceed through. So if we break this level, then I think the chance is quite high that it will go lower, back to its support area at around 68, 67. And to be honest, I really don't see a scenario where the US will be able to fight a really long. I'm sorry, guys, if you hear a baby crying in the background. It's
That's all good.
my baby. I think it's doesn't agree with something. So, yeah. So basically, but if we break below, then I see a possible another $4 or $5 drop from the 72 area, and at the same time, if it holds and we go higher, then I want stocks. Like for a long scenario on oil, I want to see weak stocks, right? So I want to have this basically asymmetrical move in stocks versus oil, because I think it's currently an indicator that can provide you, that you can use as an indicator that provides you basically a further edge in the markets.
And you would say intraday as well, not just on the macro end, but also zoomed in.
Yeah. Intraday, like on the 5-minute chart, 3-minute, like 5-minute chart, 15-minute chart. I think it's, if you have such a, like, it's a big news, right? Even though everyone is like, yeah, Trump, it will be nothing that will last, but it's still a major important news event. And if it's still in play, then you can always, not always, but then you can watch the contrarian part, or like of the other asset, and to see how it behaves, and this can give you some clues. So yeah, but for the time being, it's a bit, yeah, it's tricky. I think today is tricky because we're also sitting. Obviously we have this big pattern, right? Like this big triangular pattern here. So I think this area is super important. If we break above this trend line, then it might be a really strong bullish scenario, but it still sits almost 500, 400 points above. Yeah. So for the time being,
it's still holding. It's still holding its bullish pattern.
Yeah.
Like you said, with the consequences of, import and export of oil and gas to the world, Strait of Hormuz, the whole disruption of the economy, but stocks are still holding for some reason, even though, okay, sure, the whole economy is delayed, the market's more forward-looking, more aggressive on both ends, the downside and the upside, but it's still holding, Henry. So it's neutral, and it's waiting for that confirmation on the back end. And then publicly, the confirmation will probably show a few months later. When we're already at all-time highs.
Yeah. No, but like on an intraday level, because we're day traders, right? So we have the high from Monday and we have the high from last Thursday. So those two levels I want to see falling for a really sustainable move to the upside. And as always, you see, if you extend these, it basically perfectly aligns with our bullish flag. That is also, if it breaks, as a continuation pattern. So this is for the downside. But as for today, my friends, it's actually a range play for me, because for the time being, I would just sit on the sidelines, wait for the market to provide me with more data points. Because at this current position, I'm not see many opportunities. What do you want to do? You go long here, like, do you really want to have a stop here, sitting at like 200 points away? It's not possible, right? So I want that the market shows me like a micro flag on the 5-minute chart, 3-minute chart, or something, or that it makes a correction, takes out the lows here, like the initial opening, goes back into its value area, and then establishes here a support area, and then I would look for an entry there. So basically, I need more data points in order to get a better signal for my entry. And it doesn't matter what you use. It can be price action, it can be candlestick analysis, chart patterns, ICT, whatever. There's no right or wrong. It just, again, I repeat myself every day. Choose a style that fits your personality, that matches your own style. Stick to it and learn everything about it. Practice it, especially, and then adjust your risk profile with your towards your style. So yeah, therefore, visit Purdia.com, use pre-market to get 25% off, and I always recommend our instant funding accounts. I know those are the best in class accounts that are out there for the instant funding. So you skip the evaluation, and you also, instead of over and over need to qualify for another payout, once you're qualified, you don't need to qualify any further, and you are getting into a real move account with TraderWeight and NinjaTrader, and you can then withdraw as you wish as you go forward and make money and can become profitable trader and get the payouts as long as you're profitable without the need.
Sounds pretty smooth, Henry.
It is. Yeah. It is pretty smooth. I have to say.
Personally, for me, I've noticed, but I know the accounts come in more as a premium, but there's a reason why they come more as a premium. The instant accounts, because you skip the eval, and then, like we said before, you don't have to rush. You don't go through that rush mindset.
Yeah.
Pass the challenge as fast as possible. And at the end of the day, you guys should look at your expenses, and you're probably spending more on these challenges compared to maybe just one time on the instant, where you take it easy, you take it slow, you just get in, and once you get to the profit target, you get paid right away instead of rushing, over trading, FOMOing into some ideas where like, oh, this could give me a nice 2-to-1 or 3-to-1, where I just go all in on this challenge. Okay, fail it, reset it, instead of going slow, pay a little extra. No financial advice, no advice on anything, you guys, but just for me personally, this has always helped my trading and my mindset on these instant accounts with Purdy and other firms, because I take my time, I go for the monthly payout, I go for the business mindset. This is how I allocate and scale my trading.
And I think the biggest issue for people, if you are stuck at the evaluation phase only on the evaluation accounts, is basically that you also create bad habits. So people are basically over trading, they're over leveraging, and then once they qualify for the instant funding account, like from the qualification phase to the actual funded account, they still have this bad habit. It's like I would say comparable to only trading on the simulator, on the sim account, and just fooling around and clicking the reset button every day. You just establish so many bad habits, and it will be just super complicated for you to get rid of these. Just like one of the
exactly, and like not every firm offers the instant. So even for myself, I have no choice to want to scale, to go for the challenges. And even now I find myself, hey, it's just a challenge account. It's like a fourth of the price, a third of the price, just to go all in on this certain area. We're humans, you guys. We're all going to make bad decisions. You can never completely erase those bad decisions, but the key is to have the recovery plan if that bad decision is at a loss. So have the recovery plan, have the impulse control, And yeah, that's what Henry and I can help with, because it's not so much about erasing, because we are humans, we're not robots. Well, for now, we're not robots for now, Henry. We don't
Not
have the
yet.
chip,
Not
we don't have
yet.
the chip in our minds.
It's coming. It's coming. It's coming.
So for now, we're humans, you guys. So let's embrace being human and let's embrace the recovery. And that's why we're here. We're to help. Any questions, let us know, you guys. The support is always there for Purdia. Like, how fast is the support for Purdia? It's pretty fast. I know the website of the Discord comes right away.
No, Purdia is really efficient in this case.
Yeah.
And we always want to help you. Always want to be super fair. So therefore, I would say it's easy take. All right, enough of self advertisement. Let's check what's going on in our correlation metrics.
Yeah, so let's quickly check in. What's going on, you guys? I have the spread here and the ranking. And sorry, what's the spread? The spread is the market ranking right here. That's the rotation, where I don't compare the assets in US dollar, but I compare them against each other. And so far, NQ is the leader for the day, offering, just cutting through the noise, showing me the real conviction. Who is first, who's last? Because sure, like all four indices are in the green, but who is a stronger play? Who would I want to be involved with? I don't care about second and third place. I care about first and fourth. I'm getting short ideas. I'm looking at Dow Jones. So these are the pivots I draw from yesterday, from the no ceasefire news. We have overtaken it post FOMC minutes. Now, today's pre-market, we have overtaken the current extreme level of this pivot as well. And what I like to look at as well, okay, it has that, giving a strong picture, but now let's look at Dow Jones on the ratios. Also, sorry, no, let me quickly get into the ratios right here. So what I like to see is I compare NASDAQ and all indices. And if NASDAQ on the USD chart is showing a strong print, I also want to make sure, is it really strong, or is there a divergence going on with the other indices? So for today, it's a clean outlook. All three ratios against YM, ES, and Russell are above the daily open, giving me the confirmation. If I wanted to take any long ideas, then it's the strongest index. So, this helps me just to cut out the noise, you guys, and look at the real conviction and confirmation, whether, the market's balanced or imbalanced. But right now, NASDAQ is looking balanced. Just give me a second, Henry. Yeah. We got news coming out. Okay. Yeah, we got news. Sorry, guys. We got news in about 10 minutes as well. That's that. Let's look at Dow Jones. Sorry, guys, because I'm also looking at some trade ideas at the same time. I'm trying to multitask with you guys. Soon I'll be able to showcase the trades pretty soon. But yeah, as you can see here, let's look at Dow Jones, you guys. What is Dow Jones showing us since the no ceasefire impulse from yesterday? Clearly, yeah, lower highs again pre-market, and now lower highs once again for the third time into the New York Open. So yeah, because Dow Jones has now overtaken the pivots from yesterday and just resting at the bottom end of this extreme level, there is no way I'm looking at a long for Dow Jones. There's no way. For some reason, I don't know why a lot of traders like to look, do the opposite, where they're like, oh, Dow Jones has to catch up. It must, retake these highs the same as NASDAQ. No, Dow Jones doesn't have to do anything because it's not showing us good buy-side opportunities. I stay away from it, you guys. Stay away from it. I'm not looking at it. This is how, I look at the markets. And yeah, just confirming last night's trade can catch up later in the day. But for now, I'm not looking to that. I'm only looking to NASDAQ, into strong opportunities. This is what I'd be looking at as well if NASDAQ retested a strong pivot. And after the reaction from the pivot, showing me strong conviction. So what are we going to do? Let's look at the risk to the upside if this move continues, you guys. So let's let's put out the measured move. Measured move from the pivot from yesterday, 29,400 to about 29,780, and look at a risk to the upside. Since yesterday's impulse level was the important level to watch out for. Measure this right around here. Do a quick estimation calculation, 30,139, mark it out in red. And is this going towards a high? Yes, it's going to be taking out the Monday's high. And does it line up with a New York Open? Oh, very close, Henry. Almost lined up with the New York Open. Very close here, a few points off. About 40 points off. But what is 40 points these days, Henry? What is 40 points?
Used to be a lot.
It used to be a lot, but not anymore. Not in the Trump era. Volatility has definitely kicked up. So yeah, this is the area I'm looking for a new pivot to be tested, whether I'm long or short. Let's wait and see, you guys. So yeah, it's still about how many points away is that? The total pivot line or the total about 350 points from where we are right now. We're getting bullish momentum. Yeah, close to 230. So not too far away. But yeah, definitely getting some ideas. If NASDAQ can hold this level, show a strong confirmation, show a strong volume to continue, then I like this idea. But then again, we also have news in about 7 minutes. And as we talked about before, yeah, it's just existing home sales. So it shouldn't, it shouldn't be much of a reaction. But then again, with Purdia, guys, does Purdia have a news roll, Henry? Even though existing home sales is a red calendar?
No, we don't have news roll. But I have to say, we are if Trader Wait or NinjaTrader decide to make any changes, or CME decide to make any changes, then obviously it automatically applies, right? Because we're using the infrastructure, we're using the rules. So if they decide to raise the margin requirement and whatever kind of things, then obviously it's not on Purdia because we're just using the infrastructure, then it applies. But no, Purdia itself has no news. So no volatility news, no big event news, no 2% or whatever the fancy names are, all kind of other rules. We try to be as close as possible to your own retail prop account, broker account as possible. And I think this is the big differentiation between us and the other firms.
No, and it's nice to have that smooth confirmation with the rules as well, because even though, let's just double check. Yeah, the U.S. existing home sales is technically a red calendar news event. And for a lot of firms I see where it doesn't matter whether it's FOMC or the existing home sales, there's like a 2-minute mark where you can trade, even though this print is almost non-existent. It's not going to shake up the markets too much. The FOMC roll, I can see it, Henry. The gaps will be big. The volatility could skip out on people's stop losses, and then, and then afterwards with customer service, you get a lot of complaints. Hey, skip my stop loss or skip my order, and it failed me. Blah blah blah. They don't want to go through the headache. Okay, I get it. On those big days, the FOMC or the CPI, because customers are still going to try and go all in on those days. And
yeah, but the problem is with these small news. If you forbid, if you block to trade them, or you forbid to trade them, or you need to be out, right? Yeah. You force the people maybe out of good trades, and then if the market does what it does and it goes its way, people might start going into rage mode and FOMO, and instead of waiting. And I think this is counterproductive for a long-term partnership. And so therefore, as again, repeat myself, we try to be as lean as possible in terms of rules, and that's what different approach.
Which a lot of times, because it's the trader and the prop firm relationship should always be smooth, even in the sim environment and the live environment. But since Purdia doesn't have to worry about the sim environment on the funded stage, only worries about the live environment. So this is also why they've stuck with NinjaTrader and TradeAvate, because they have a strong live environment. And you guys could always feel comfortable. Everything's in the fine print, no rule changing. as well, because we've seen with all the other firms where they retroactively change the rules afterwards after signing the contract. But we don't have to.
No, I mean, and this is also what you try to do, right? So in case we might need to change the rules, it will never be retro perspectively. It will always like communicate it in advance, and then we will communicate like, right, guys, there might be some changes coming up because it's important for the business model, because by the end of the day, we're also just a business, and if we see like, right, with this rule set, it's not possible for us or whatever, we're running issues, then we might need to change them. But I have to say, in the last 4 years, it never happened. So there was no retro perspective things. We always try to be upfront and as transparent as we can be. I repeat myself, in case you find something on the homepage that is not clear stated, or you think that it might be misunderstood, please reach out either to me or to Steve or to the support and mention it, and then I will take care of that, because our goal is really to be as transparent as possible and also as upfront as possible, in order to have a clear communication and and create a professional environment where, you know, right, if you trade with Purdia, no surprises, no games, basically like straightforward trading where only your own performance counts and not any other external factors or limitations.
Yeah.
So yeah, that's basically the idea behind. All right, I think that was the word of to Sunday, right?
Yeah.
And
that was a good session. And this is quickly, I just want to showcase an idea where we got a bullish volatility print from this pivot that I drew out, and this for today will be my range for my risk. And this is about, 180 points. Might seem a lot, but like Henry said before, that can be taken out within a few minutes, because the average range has been much higher on average than usual and in the past. So this is going to be my range, whether on the short side or the long side. If I'm looking at ideas on NASDAQ, just an idea, you guys. I'm not saying whether I'm entering here or whether I'm entering on the 50%, but because I'm seeing NASDAQ hold above this important pivot and create a new range for the day, this is going to be my calculation for my risk. And how do I calculate the range for my risk? I have a risk calculator right here. How I use, it's completely free. If you guys want to, have any more information, I have it in my newsletter as well. This is the one and only indicator that I use, you guys, is my risk calculator. Pretty simple right here. And that's all I use. No VWAP, no other, EMA, SMA, but just to quickly give me the calculation of how many contracts to use on 180 points of NASDAQ. If, let's say, I want to risk $500, $1,000, whatever it is, on my prop accounts. And this is my holy grail that I use in my magic number. And I'm
straightforward, right?
Yeah, very straightforward. So this is the 180 points is going to be my risk factor in my range that I'll be using for today.
Cool. No, and I think sometimes people are saying like, yeah, but I want to know the exact setup entry point, and there's no right answer to that, because you might sit for hours and wait, and then you might just had like correction in 3 minutes, and it goes down 150 points, and you say like, all right, it's nothing, no major news came out, it's just a correction, somebody flushed down a big order, and a big order has been executed, and you just use the chance and you go in long, right?
Yeah.
And sometimes you sit there for 3-4 hours to get a signal. So therefore, I find it always really hard to say what's the exact entry point, because this is like why good traders are waiting forever for a good signal, because they always want to have more cards on the table to see what's actually being played out.
Yeah. No.
Chart. And
I agree 100%. It's all about patience, all about knowing your limits. And sometimes people ask me, and I know we're running a little overtime right now, and we had the news.
We have time.
We had the newsprints come out right now, and no surprise, you guys. No surprise. Even though for some reason it's a red calendar event, let's go on the 1 minute, nothing really happened. And if NASDAQ wants to continue forward, where's the 50% line? 50% line from pivot to pivot is right around here, 29,950. If this gets, if the 50% gets overtaken, consolidates, and starts moving higher, then whether it's later today or tomorrow, it will definitely, the probability for it to meet the next area of interest is definitely there. But then again, like I said, it doesn't have to happen today or end of the day or even tomorrow, but eventually at some point where this new area of demand is accepted and price wants to reach new areas of supply. And that's just how the market works, you guys. That's just how the market works.
All right, cool. Then let's finish it here, guys. Once again, do your own thinking. Please don't follow anyone on social media, and especially not us, for any recommendation if you have the feeling that we made any, but it's pure educational and entertainment format. So we try to help you getting better step by step, day by day. If you have any questions, reach out. The socials are down in the description down below. You can also write a comment and we'll get back to you in the next stream. Otherwise, subscribe to Purdia. You can subscribe to Steve's newsletter. And yeah, follow us so you get notified once we go live. Next live session is tomorrow, Friday, 9 a.m. Eastern time. And yeah, for the time being, happy trading, trade safely, and see you on Friday.
See you on Friday. Thanks, everyone.
Ciao, Steve. See you tomorrow.